And so tonight we're going to have two fantastic passives, Dustin and Sandi. Where are they?
Where are they at? Hopefully they're in the room.
Come up.
Come on up here. We need you to talk.
Correct. And we're so lucky that they give back. They are super passives. They invest in a lot of deals, and they've been super successful. So I'm going to turn the mic over to them so they can tell. Oh, okay.
And they're going to tell you, because they're from the land of Birkenstocks and kale.
No.
Aren't you from Austin area?
No, we're from Bastrop.
I know.
Right.
I'm just playing with you.
I thought we were from Hawaii.
I know.
So go ahead and tell your story.
I'm Sandi, and this is my wonderful husband, Dustin. I grew up in Kailua, Hawaii, and graduated from the University of Hawaii. By the way, that's the original UH, founded in 1907.
I like that.
Dustin was born in San Antonio and lived in a U.S. military family and grew up all over the country. And then he joined the Navy right out of high school. In 1995, we met in Hawaii at the Hawaii Pacific University, where we were both going for a Master's of Information Systems. Then in 2006, we left Hawaii and moved to Austin. And I had an IT job, and he had a job as a cameraman for movies. And in 2014, we learned about...
Not nudie movies.
Thanks for the clarification.
I just want to make sure they knew that.
In 2014, we learned about lifestyles and immediately signed up as preferred members. We were excited to join Lifestyles, but at the same time, we were overly cautious and pretty scared of investing a lot of money. And so we invested a whole $45,000 across 3 deals, $25,000 in one, and 2 deals of $10,000 each. And waited to kind of see what would happen. And along that time, we were also learning a lot from Lifestyles. But our 2 $10,000 deals returned 350% and 240%.
Wow.
And then we were really excited that we did so well, but we were also really annoyed that we invested so little.
Exactly.
Who understands they were cautious, you know?
We were definitely overly cautious. But we joined Lifestyles. We were looking for a way to do something different than working forever. And we had already done some single families and knew that real estate was a good thing to do, even though we learned to do it much better from Lifestyles. A friend of ours took Dustin to a case study. We'd never heard of Lifestyles. And then when we heard David at the 2-day and learned about multifamily investing, it just really blew our minds. We didn't know that was something you could do as regular people.
And you saw my seminar when I was up in Austin, right?
No, we went down to San Antonio.
Oh, you went to San Antonio,
We went to
okay.
San Antonio. You didn't have Austin stuff back then.
Okay.
Yeah,
Our friend that took us to Lifestyles for the first time in 2014, he waited until 2021 to actually join Lifestyles.
Really?
he wanted to see through us that it really worked.
He was
So
more
he was even more
conservative
cautious than you.
Exactly.
Yeah, so before we joined, we had a good life. We were doing well. We had a big house in Austin. We both had good jobs. We had a pretty high net worth. We were doing well. But Lifestyles taught us about pulling debt equity out, and we began restructuring basically our lives. We had vacant land in Hawaii that we put up for sale that took several years to sell. We had a duplex in Corpus that we sold, and we sold our big house in Austin and built a modest house in Bastrop, and basically restructured everything. And after our small deals returned a lot of money and we saw how well our friends did in Lifestyles, in 2018 we got serious about really doing passive investing. And now we have, as Dell phrases it, the great life, and we've invested in about 35 apartment communities.
Give him a hand, because that's good from a couple.
I think we have about 25 active now. Some have sold, and we're full-time investors. And as of a year ago, I was able to quit my job, so we've got no more W-2 income. and we've still been able to grow our net worth. And now we've added on to our house in Bastrop and have our country estate.
Exactly. It's gorgeous.
We call it a country estate because everybody comes to visit us and
Yep.
they're like, oh, you guys have this compound. It's not a compound. It's
Yeah,
an
it's a
estate.
compound.
That's how David Koresh. So, but here, really quick, I want to explain something that they said that was very powerful. They kind of glossed over it fast. Most of you, when you hit retirement age, what are you taught? You draw down on the amount you have, correct? What did they say they're doing during retirement? It's still growing and doubling. Who likes that plan better? So instead of drawing down, you're growing. So that was very powerful.
So this is a portfolio of our sold deals. We've sold 10 deals so far. We're selling it. Our average down, if you look at the bottom, our average hold time is about 2.9 years. So just under 3 years, we're holding on to deals. We invested $581,000 in these 10 deals, and we turned that into over $1.2 million. The total return was about.
Guys, did you hear how excited he was?
In 2.9 years.
That's exciting for a conservative person. You understand that?
Our average annual return was 41% across these 10 deals that we've sold.
Yes.
Which is pretty amazing.
I'm very jealous.
We're not doubling in 2 years, but we're doubling in 3
Yes.
years.
Yeah, my goal is what I tell people, we want to buy the second year, try to make about an 8% return tax-free and double every 2 to 3 years. So are they doing right there? I mean, I don't care about their best deal. I don't care about their worst deal. What is your average? Isn't that the truth? And that's how I look at it. And the goal is that 100%, and they've done that on these deals.
Yes.
And
That went full cycle.
And we're conservative. So when we pick deals, we pick conservative deals. There are deals that do much better that we decide not to get into because they
Yeah,
just
it's
don't
horrible.
seem like a
Those
fit for
conservative
us.
100% returns. Who'd hate those 100% returns conservatively?
The people who get 330
Well, I know, but-
returns.
Well, you see, we got one deal that did a 400% return, or 400% gain. It was a 500% return.
Right?
300.
How much did you put in that deal?
Well, it was a portfolio deal.
Oh, okay. I know which one. That's where you had
Yeah,
two at once. So
we
one
only
cleared,
had
one didn't.
11,000 in that deal, but still.
That was a Phoenix
11,000
deal,
covered
right?
The entire investment, and that was in
Exactly.
Phoenix. Yeah.
So, and the reason I bring this up, where's the Phoenix? They live in Bastrop, which is in Texas, if you don't know that, and people out of state. But they invest all over the place. So, would you share? Because that's a bigger picture for people. Because you invest in Phoenix. Have you
I got a
invested?
slide for that.
Oh, never mind.
So move on.
I should know you have a slide for everything.
Okay.
Let's move on. The checks are real.
Bam.
Sandy loves to carry the checks, and we don't get checks that often anymore. Mostly they just do direct deposit, and we don't
love
even
it.
get to go mailbox money.
But I love carrying those checks around and showing people, look, it's real, we got money. As David says, it's pee in your pants exciting.
There you go.
Sandy, we'll go to
Excellent.
a networking event, and the lead that just sent us the check, and Sandy will take the check and show them the check that they just mailed to us. Look how
I
excited
love it.
she
I
is.
love it.
One of our members up in North Texas, John Pry, he has a saying, don't eat your seed corn. And what he means by that is when you invest your money and then you make your capital gains, you do a refi, you do a sale, reinvest that into new money and live off the cash flow. And so that's what we do. We follow John Pry's don't eat your seed corn motto. And you can see that our portfolio, you can see here the first 4 years, we didn't have any investments. And in year 4 or 5, with that 2018, we started investing. And our portfolio started growing, and every year we made a little money and kept adding to it. And so now we've grown our portfolio to, we're almost at $2 million portfolio at this point.
Really quick, I want to help people in the room to understand this chart. If you take this chart and you flip it around, that's your stock portfolio.
That's funny, David. 5 years.
So, and this is our cash flow. As you can see in the very beginning, we were making no cash flow. You can see up here where we finally got serious about investing, 2018. It took us about a year to start cash flowing, and then the cash flow just kept going up and up and up, and then we had COVID. First quarter of 2020, everybody stopped paying us cash flow. The properties made money. They were all profitable, but the lead investors were being conservative. They kept the money in the bank in case something happened. And they held that whole year of 2020, they were being very conservative, and the money was in the bank. So we didn't lose any money. But
Who likes that? So during the worst plague, the worst time in our life, right, the guys are holding back to be cautious because we didn't know what was going to happen. It's not that you learn, they just held back for the what ifs. That's why we do it that way, because we teach investing conservatively. When I say conservatively, I'm not talking about politics. I'm talking about the way we invest fiscally.
But the most important thing on this is you can see over here where Sandy stopped working. I had already quit working before that and was focusing 100% on real estate. Sandy stopped working, so we stopped all W-2. When she stopped working, there was no retirement check or anything. We lost everything. We make more money every single quarter after she stopped working. It just keeps going up and up.
Yes.
So the less work we do, the more money we make. Yeah, so this is our one about diversification.
Oh, that's a nerd chart right there. That's perfect.
We like spreadsheets. So we diversify. We're invested in cities and states all over the country. We make sure we diversify in leads. We don't put all of our money in. We do 20 deals with one
Good.
lead investor. We wanted to be diversified. So we try to get, we're in Texas, Georgia,
Hey,
Mississippi.
wait, I have that's Castroville, not Catroville,
Oh, did I typo that?
right?
I get the same grades you did in English, so.
I told him that.
Uh-oh. So diversification is the key.
Diversification.
Spread the risk.
Diversification. We diversify based on the amount of money we invest in deals, the leads, how many deals we're in. Our goal is to stay around 30 deals. Some people have 60, 70, 80 deals. I'm too involved in reading all my reports. That's too much work for me. So 30 deals is where I'm happy. I don't want to go below 20, but I want to stay around 30.
Okay.
Networking tips. Go to the expo. If you're a member, if you're not a member, join and go to expo, network. At expo, connect with all the leads and aspiring leads there.
Yeah, there's hundreds and hundreds of leads, just so you know. that you
Yes.
invest
Oh,
in.
yes. We go to virtual events. We travel around the country. We've gone to live events in Arizona, Tennessee, Georgia, all over Texas. We go to live networking events. There's met so many great people. We got some of our best friends now are all Lifestyles members. So we've really met some amazing people in Lifestyles. It's great how they pull great people together.
We love having the networking events. There's a picture down there of a potluck on our back porch with a couple of people there, and a different one in Hawaii around my dad's pool.
Notice the modest back porch.
Yeah, I got to explain something because some of you are Texans in this room. Explain to them your barbecue pit. Explain how small it is.
It's normal. It's an 18-foot gooseneck trailer.
An 18-foot long barbecue pit. So,
Exactly.
you know what happens is they always have these great cookouts, and they always invite me. And what weekend is it every single time?
The 2 days.
When I'm teaching you guys. So my wife goes and eats barbecue, not me. Not that I'm jealous or anything.
So how has your life changed since joining Lifestyles?
Our lifestyle has changed amazingly. We've replaced our W-2 income with cash flow, more than tripled our net worth just in what we've done with Lifestyles. It's been amazing. We don't work now. Our full-time job is finding new deals. Our goal is to maintain about 30 deals. We sell deals about every 3 years, which means we sell a third of our deals every year. That's 10 deals for us. So I sell 10 deals. I got to find 10 new deals every year. My only job in the world is to find 10 deals to replace the 10 deals that I sold, and have to invest twice as much money because I doubled my money when I sold on those first 10 deals.
So let's take that back a step because that was very powerful what he said. Overall, across all his deals, yeah, he's making 100% return. But what did he say he did with his net worth? Anybody hear what he said he did?
Tripled.
He tripled it. Take whatever amount of money you have, your total net worth, the equity in your house, everything you have, 200 grand, $500,000, whatever it is, and triple it. Wouldn't that be life-changing? Give him a hand for doing that.
Yep.
It's huge.
And people are always concerned on, will there be enough deals? Do you run out of deals to look at?
No, we've never run out of deals. We run out of money way before we run out of deals.
Right.
I want all the new folks, especially if you come to my seminar this weekend, which will be in this room, hear what he just said. This is very common among the members. You will run out of money before you run out of deals. And then you're like, oh, I wish it was in this. Oh, I wish. Watch this. How many folks in this room ran out of money? So you see that, all the new people, all these people, they ran out of money. They're just waiting for that 100% return so they can go into more deals. It's a good problem to have.
That's a great problem to have.
Yes.
Yeah.
I used to like my W-2 job until David Fisher made me like it less. That's definitely true.
Everybody we've met says they wishes they had joined Lifestyles and started doing this sooner. So start now. Don't hesitate. Go to the 2-day, learn from the 2-day, and get started. Single family, multifamily, whatever you want to do, whatever fits your life, do it. Don't wait. I've yet to meet a single person that says, man, I wish I hadn't joined Lifestyles 10 years ago.
No, never.
And don't think you can only come to the 2-day once. Part of our membership, you come as many times as you want. How many 2-days do you think you've been to? Because you've been to mine, you've been to several other teachers as well.
We've been to at least 15 2-days.
15 2-days.
in
I'm coming
multiple
tomorrow.
states.
Well, tomorrow we're not having a 2-day.
No, I mean Saturday. Sorry. Saturday and Sunday, right?
There you go, yeah. So and you, especially members in the room, I encourage everybody, come back at least once a year because you'll be in a different part of your life. When you first come, you go, maybe I'll buy one house or maybe I'll invest in one apartment. Then all of a sudden you're in 5, you're like, now my life's different. The seminar will change because you're in a different part of your life. And that's why I encourage everybody. The numbers change, so you got to do that. So.
And the market changes, the economy changes, everything. Lifestyles only comes to Austin 3 or 4 times a year. So we usually go to Sunday when they come up to Austin and try to see what's new with the apartment stuff. It's Saturday single family, Sundays multifamily. So we like to go to the Sunday when they come up to Austin. But we've also gone to Phoenix. We just went to Hawaii and listened to David. We've gone to Georgia. So we travel around, get to meet. It's great to go to the 2-day and meet new people if you're already a member. So we just like it.
We've never listened to the online one. We probably need to try that one sometime.
Too many distractions. I think coming in person is
It's so
key.
much better in person if you can.
Yes.
So
And go ahead.
Our short-term goals are to get over $2.5 million invested in passive deals. We're almost there. And then we want to build up to over $30K a quarter in cash flow. We don't know what we'll do after that. We might start spending money and not listen to John Price's "Don't eat your seed corn" rule and just start spending money on stuff. And we like traveling around, going to lifestyles events.
And your long-term goals?
Get more of our friends and family into lifestyles. That's been our hardest thing. Most of our friends and family think we're crazy. So.
Yeah, I know they see how you're doing better, but they don't believe you, right? I get that.
Some of them are watching tonight, believe
Oh, are
us.
they? Look, they opened their portfolio. They showed you the numbers. Yeah.
We plan on doing this for the rest of our lives, and hopefully we're going to live for another 40 or more years. So we've got to turn at least 10 deals a year for the next 40 years. That's a lot of deals that we plan on doing. So if you're a lead or aspiring lead, come say hi to us.
Excellent. Do we have any questions? Do you want me to give
I got to run with it. I can do it, if that's okay. Wait, hold on. I want to do this because I want the people online. They want to hear you. There's guys from California. You speak a different language, so they got to make sure they hear you.
So you're in 36 deals currently,
25.
approximately. So how many did you look at? Was it 70 before you chose the 36, would you say? And then the second question is, out of those 36, how many were aspiring leads and how many were returning people?
So the second part of that's easy. Aspiring leads, a little over a third of our deals are first-time leads. We really like first-time leads. They work really hard. They listen to their mentors. They listen to their operation consultants. They are in there to learn, and they do what they're told. So we really like them, but they are a little higher risk because if they don't do what they're told, they don't know what they're doing. As far as how many deals we look at every deal that we can look at. We probably look at 5 to 10 deals per week.
And we're investing in 10 deals in a year.
Like 500 deals a year that we look at.
So I want you to remember that, all the people out there. Are there plenty of deals out there? They just have to find the right ones for them.
Yes, there's deals. We look for cash flow. We're retired on passive income. We need deals that make cash flow. So we'll look at a deal that doesn't have a great capital gain, but it has great cash flow. Everybody else says, I don't want to do that deal. I want that capital gain. We want the cash flow. So different deals for different people.
Okay, we have an online question.
Do you focus on add value deals or yield or combination?
Like I was just saying, we focus on yield plays. We live on the cash flow, so we want deals that have cash flow. We really try to find hybrid deals, but hybrid deals that lean towards the cash flow side. We want some capital gain because without that capital gain, you're not going to double your money every 2 to 3 years. And we need that seed corn to keep growing our portfolio.
And really quick for the folks that are new, I know this all sounds like Greek to you. That's because they're talking to members already in a bunch of deals. They're asking advice how they became so successful. I will break all this down this weekend, really simple so you understand all these terms, okay? So that'll make sense. There's a little bit of inside baseball going on, okay? Anybody else in the room? One back there. Man, you give me exercise. You should be up here, man. You just wanted me to run all the way back here. Here you go.
I'm a challenge member, and I'll get the email.
Hold on a second. Let me see if this it sounds quiet.
Speaking into it.
No, it's not you. It's me. Can I have another one? This one died. Thank you. You can get that one. That one looks like a Christmas tree. Here you go. I'm sorry, my friend.
Thank you. As a challenge member, I get email blasts, and it gives a few numbers to look at. Is your email similar to that? And when you get them, how do you analyze so many deals so quickly?
As far as the deals we get, so the lead investor goes out and finds their deal. They'll write up a business plan and send us all of their numbers. It's a lot more detailed, a little more complicated than what you're looking at with the single family side. But it just takes practice. That's, like I said, we look at probably 500 deals a year. We've probably looked at 1,500 to 2,000 deals since we've been members. So you get good at it after looking at a lot of them. We were really lucky when we joined in 2014. When we joined, there was not as much stuff going on in lifestyles. There was nothing online. And so some of the really experienced leads back then would have meetings at their house. And we get to go hang out with these great experienced leads at their houses when they were analyzing deals. And we learned from them how they analyze deals. The guys that became, David Shippey, who's got $1 billion worth of deals right now. We got to watch David Shippey talk about how he was analyzing deals for himself and learn how to do deals. But now you go to the live training, go to as many events as you can, and when you do enough deals.
We have classes on all this to break it all down, because I know you're a challenged not preferred member, but we break it down. Madeline teaches classes on how to do this, how to read the stocks. There's basically a summary page and a PPM that says, here's what we expect and why and how long. That's kind of the snapshot version of it. Great question. All right. We'll do one more. I got to let the new guy ask a question. Are you mad at Robert for bringing you here, first off?
I am. No, I'm happy.
Go ahead, Robert.
We have the same name too, so.
Oh, okay.
Yeah, it's like you said, I'm new, and it looks like you've done very well. This is all multi-listing properties, and it seems like you've really appreciated over the last four or 5 years, and it's during COVID, and the market's been kind of crazy. Do you think you'll be able to duplicate that in the next 4 years?
Yes.
Because the market is, with COVID and stuff, you've seen a lot of, staying home and apartments, and values here in Texas have gone
That is a
sharp.
great question, Rob. So I like his short answer, yes.
The leads in lifestyles, they learn how to buy deals they're going to make money. We're not buying deals that are at risk. We make our money when we buy.
And I spent 16 hours this weekend on breaking down why. So I'm going to break down a fast version for you right now. What type of properties do we buy here at Lifestyles? We don't buy the perfect properties. We don't buy the low-income properties. We buy right in the middle of the middle class. So let's take the worst time to buy anything was during COVID. You agree that was the crash in the economy? So I want you to answer this. Does everybody in this room need a place to live? Is apartments a luxury item or a necessity? Necessity. We're only targeting the middle class, not the high end, not the low end. Low end people were one flat tire away from being broke during COVID, right? If their transmission went out, guess what? They didn't pay the rent, okay? And there was government assistance for them. We don't do that. There's Section 8, government, housing, all that. We don't do the high end stuff because why? When the economy crashes, what happens? Those people become middle class. There is only one person, one type of people in America allowed to go and work during COVID. What type of people were they? Essential workers. So what is my demographic? Essential workers, folks like you. So even during COVID, the plague, the worst time in America, we made 100% or more returns. God bless America. That's how we mitigate our risk. Great question, though.
The other thing we do is we diversify. If I've got $50,000 invested into 30 different deals and one deal completely tanks, I lose all of that investment. It doesn't hurt me. I don't care. I can walk away without crying. That doesn't happen. We don't do that. But if it did, it's one deal. I can walk away and not care. It's not all 30 deals.
So let me give you a little bit further on what he said and the logic of that. We don't say put all your money with one guy. Because can people get divorces? Could they die of COVID? These things happen. Could they vote Democrat? Doesn't matter. That's a joke. Don't read into it, okay? I'm just trying to be funny. My point is this, guys. We tell people invest some in Phoenix, some in Georgia, some in this. Why? Because of natural disasters. Here in Houston, do we have hurricanes? Absolutely. In Dallas, what do you have up there? Hailstorms, freezing, stuff like that. So this is why he diversifies to mitigate that risk. Great question. All right.
Thank you.
Well, let's give them all a hand. Thank you so much.
Give Sandy a big hand. She's very scared to be up here speaking. She doesn't like to speak in front of more than 3 people.
Yeah, good job, Sandy. I know Sandy doesn't like talking in front of the crowd.